All right. Good morning, everyone, and welcome to IBD Live, where we help you make more money in the stock market every day. I'm Ed Carson, news editor here at IBD, and with me today are Chris Gessel, Chief Content Officer, Justin Nielsen, Head of Market Research, and Alyssa Coram, our multimedia content editor. Markets writer Rachel Fox will be off screen. She's live tweeting for us on her way into work. She'll be live tweeting with the hashtag IBD Live. David Chung, Deputy Markets Editor, and Mike Webster, Head of Market Research, will be off screen. No, I don't. Head Market Strategist.
Yeah, there's lots of titles here.
Lots of titles. We'll be off screen answering questions. We'll try to get to as many as we can. For those who are new, we focus on the first hour of trading here at IBD Live, and as well, and looking at focusing on actionable stocks. Even for experienced investors, we focus on the core, growth investing tenets. So it's a refresher course for that, and a way to speed up the learning curve otherwise. But before we begin, I have to remind everyone that this is for informational purposes only. None of the stocks discussed should be considered buy or sell recommendations. So please do your own research. The futures are up nicely even after a nasty sell-off Friday. Chinese markets tumbling. So Chris, what are you looking at as we head into an interesting week?
Well, I guess I was really surprised to wake up and look at the futures and see them up after Shanghai was down like 7, 8, 9%. But I guess that was pent-up selling happening there. Aside from that, I'm going to be looking at Dynatrace because it's down 5% pre-market, and there's some trading, not a huge amount, but definitely some real trades going on there, and no news that we can see right now.
All right. Justin, what do you have for class?
So I'm taking a look at C Limited. This is one that we were talking about that just kind of drifted up very nicely and is like at a 20% profit level, and it kind of flattened out a little bit. I don't know if it quite qualifies as a shelf. It did have a little pop, but that was only 200 shares behind it in the pre-market. So I'm just kind of curious to see how this one does.
All right. Hey, Allie, what have you got for us today?
Yeah, I'm keeping an eye on Adobe. It's trading in a tight range. If you guys remember, it had an earnings gap out of a cup with handled base back in December. It's been on a nice run since then, but it is holding in a nice tight range despite all of the volatility we've been seeing.
All right, sounds good.
And I think we labeled that a 3 weeks tight in our chart stuff this weekend.
Yep.
Let me give you a quick rundown of the news. Obviously, coronavirus is front and center with what is going on out there. The number of cases has risen above 17,400. There's a total of 362 deaths. Over the weekend, there was the first death outside of China. It was in the Philippines. It was a man from Wuhan, which is the center of the whole coronavirus. So that occurred. The Shanghai Composite fell 7.7% in its return. As Chris mentioned, it was sort of pent up selling because it had been on hold for basically a week during the Lunar New Year. Hong Kong's Hang Seng, which was actually opened last Wednesday, they actually rose overnight. So that gives you an idea. Macau gaming revenue plunged 11% in January versus a year earlier. Basically travel is completely dried up as due to the coronavirus. Gilead is up in the pre-market, ticker GILD. It's supplying an experimental antiviral to a small number of patients in Wuhan that are infected with the virus. The New England Journal of Medicine also said that the first U.S. infected person in Seattle, who was in Seattle, was given this antiviral, and it appears to be helping. Crude prices are down slightly, though there are reports that OPEC is talking about an emergency cut because China is like in a major, importer of crude, and their demand is plunging right now. Luckin Coffee, ticker LK, that stock plunged last week, plunged Friday on somewhat of a muddy waters short seller report, or they claimed that they got a report. It was sort of odd. Luckin Coffee denied it. Luckin Coffee, which is down in the pre-market a lot, well, it looks like it's down again. It's been sort of bouncing around. On semiconductor, they missed on earnings, beat on sales, ticker ON. Stock is down 6%. That, is sort of one of the second tier chip makers in terms of, the leadership. Nike was upgraded to a buy at UBS with a price target of 136. Ulta Beauty, ticker Ulta, upgraded to a buy from neutral at Goldman. Target was raised to 307. Goldman also gave a double downgrade at Northrop to sell from buy. Really just seems sort of giving up on it after saying, hey, its revenue missed in 2019 and their growth just isn't that good for 2020. Uber, ticker Uber, called a best idea at Wedbush. And now it's like, now that the dark clouds have cleared, so the price target raised to 50. So we'll see. Applied Materials, one of the big chip equipment makers, AMAT, upgraded to a buy at Deutsche Bank. Some Tesla-related news. Tesla got a price target hike at Argus Research to 808 from 556. Tesla also reached a deal with a Chinese battery maker. Meanwhile, Panasonic, which has been Tesla's main battery partner, they're forming a joint venture with Toyota that will not only provide batteries for Toyota electric vehicles, but for others. So, but Tesla is up 3-4% in the pre-market. So that's obviously they're looking at the positive news. Checkpoint Software, one of those cybersecurity stocks that people have forgotten about. It used to do well, but has been lagging. It beat views, but the stock is not acting like it. It hasn't been one of the leaders. Catalent CTLT, which has been a pretty strong stock, their earnings were in line. Revenue beat. Ticker CTLT. Saia, one of these trucking firms, ticker SAIA, missed on earnings, beat on revenue. Ryanair, they're going to order more 737 MAX jets, even though the 737 MAX are saying, well, all the woes has delayed its expansion plans by a couple of years. Ryanair also announced earnings. Meanwhile, European regulators are a little worried about Boeing 737 MAX wiring. There have been reports about this a while back, and apparently it wouldn't be too hard to fix, but there's the possibility of damaging things, like some wires a little too close together, but that should mean that. And finally, Immune Therapeutics, ticker AIMT, they are up sharply. The FDA on Friday approved a drug, a first ever drug for peanut allergies. So that, I'm sure a lot of parents are going to be interested in that. Tonight we have Alphabet earnings, Google earnings, and NXP Semiconductor, NXPI. And tomorrow we have TransDigm, a leaderboard stock, and Lumentum, which is one of these Apple iPhone supplier plays. So that is what we have today. Boy, the futures are up, solidly today. Obviously, nothing like last week's sell-off, especially on Friday. Looks like the futures are up 0.5 or so across the board. Chris, is there anything you'd like to take a look at to start?
Well, yeah, let's take a look at the Nasdaq, and we've got a number of questions. One from Stephen Weisenfeld.
I keep on hitting the wrong button.
Longtime subscriber, and other folks asking about, should they be in cash? Should they be reducing margin? So we did lower our market exposure to uptrend under pressure, and in part because we closed below the 21-day moving average. It was a big outside day on Friday, not a lot of stuff getting hit very hard. We held above this low. I'm forgetting that I'm not driving
the Monday,
train.
Right. You gave up your wand.
Sorry about that.
Yeah. So we're still in that coronavirus trend.
Right.
This.
So it'll be interesting to see how the market handles things today. Where we've seen this a couple times, where it opens up and then start selling down, which is typically you like to see the market open down a little bit and then reverse higher. Yeah. So we've been, going opposite to that. And as far as cash positions, I mean, I was selling things on Friday afternoon because they were closing below the 10-week moving average, so that was raising cash a little bit for me. Until we get, we haven't gotten what we would call a vertical violation, which would suggest a much longer correction. So, still this seems like the coronavirus is a trigger for just letting the market pause a little bit and refresh, which is why we're not being, really aggressive in selling. Although, I did hedge on Friday again.
Yeah, and I just want to point out that the S&P did and the Dow did undercut their sort of that trend area. The S&P closed above its 50-day, but actually closed below its 10-week line slightly. But let's see here. I'm gonna.
And it was interesting that the S&P 500 actually ended up negative for the month. You know, just slightly. So.
Gotcha. All right.
January delivers again, a roller coaster ride.
Let's see here. Now Adobe would need to get above this level for the 3 weeks tight.
Right, and I was just going to say, we did get a question from someone about what takes precedence, it being extended from that proper buy point or the 3 weeks tight. But traditionally, when we talk about a 3 weeks tight, we consider that a chance to add to an existing position rather than initiate one unless you're being really aggressive.
Yeah, and Adobe is one of our long-term leaders, and it's, you know, since they've gone to software as a service, it's really turned into a very steady earnings grower, and stock, you know, rises the same way. If you go to the monthly chart, it's pretty easy to see. So it's got, you know, great earnings stability, great return on equity. You know, they were always, you know, a stock that was generally moving higher, although a much bumpier ride. And now, since the outlook is so much steadier, it's really turned into a good mover. So,
you know, Chris, you brought up a term that a lot of people aren't familiar with, the vertical violation. So maybe we could just kind of talk about that real quick so people know what that means.
So let's call up the NASDAQ again, and we can still see, if you'll point out where the the Q4 correction started. So this is something that I was going back and trying to understand, okay, you know, sometimes we get these little corrections that are 5-10% and nothing happens. And other times we get, you know, 3-4 months of really sloppy action. And so I was looking at how they started, and I started noticing that there would be a real distinct change in character in the market. And so you would get maybe 4 out of 5, 5 out of 6 of down days in a row where the selling was heavy, it was intense. Some days it might be even, you know, a big sell-off like 3%. And usually when you get that kind of break in the market and you're taking out the 50-day and or the 200-day, that we termed a vertical violation, where it's coming down and slicing through those moving averages. And what typically happens after that is you get about 3 months of correction with typically 2 attempted rallies that fail, and maybe on the third or the fourth one, they work higher.
And so that means you could have an actual follow-through day, you know, where, you know, that's usually our signal to, like, okay, let's start buying again. But we kind of get a little bit suspect with those first ones when we see that vertical violation.
And the Q4 was the perfect example. There was, you know, came down, tried to rally, rolled over again, made another new low, rolled over again. And then it wasn't until the end of December that we got a big, powerful move. There was news moving the market with the Fed, you know, changing their stance, and then we got a follow through, I think, on January 4th. And from there, we were off to the races, at least for about 3 months. So that's the kind of action that we're looking for before we would just, you know, say we're in a correction. Of course, if we, you know, let's say the action turns negative today, and we, you know, fall dramatically, that we could be en route on a vertical violation.
You know, just to tell you where the futures and where the market is right now, the Dow is up 0.5, but the composite is up 0.7, and the S&P 0.6. So sort of near the highs of the day. Nice action so far on that front. Let's see here. Actually, interesting enough, just to point out, Las Vegas Sands, despite all the, you know, we knew the news was miserable. The Macau gaming revenue was terrible. and well below estimates, but maybe the estimates hadn't really been updated. I don't know. I mean, people had to know that it was going to be absolutely just terrible. But it is interesting. Sometimes you sell on the rumor and buy on the news kind of thing, and or the opposite way. So there is that. I thought maybe we go to Dynatrace since that one's actually moving more than some of these others. So Chris, you wanted to take a look at this one.
Yeah. So it is down through, well, it's down less than it was in the pre-market,
Yeah.
now down 3.5% and retaking 30. So not
And
great, but there's a ton of volume
yeah,
coming out.
1.2 million shares in that first 5 minutes.
Right.
Yeah, and a very strong, 5-minute bar there.
Right. So, I mean, we've been surmising that there's going to be additional offerings because there's such a big gap between the float, which is the number of shares the public can trade, and what are held by the company, and but there's no news on it. So, at least it's reversing off the low, the open, but this is true to its nature right now. So I've got a position in it. It's fairly modest because I don't feel comfortable going to a full size position on it.
Sure. Some people were asking about Apple. Apple continued to fall. I don't think I mentioned this, but it's off the lows. It closed all of its stores for a week on Saturday. Just a minute, like at
In China?
In China, yes, in China. That was important. Not all its stores, all its stores in China.
It was implied, I guess.
That's implied, but yeah, that's an important distinction. But I think the bigger issue would be as if, I haven't heard anything about Foxconn. Last week they had said their production wouldn't be affected. So it was interesting in the pre-market because Apple was down about 1%, and it says because this has been such a huge leader for the market over the past 8-9 months.
So then what would you be doing here if you've been holding this for this whole long run? Now it's below those shorter term moving averages. Like you said, it is coming back so far this morning, but still under that level. I know a couple people asking, is it a good place to add here? Would you want to shed a little bit?
Definitely. Let's go to the weekly.
Yeah. I'm trying to press that button. It just
doesn't want to go.
Just doesn't want to go. It's a little frozen right now, I think. There we go. Okay.
Yeah. So this is not in a spot to add. It's very extended. It's been it's weeks since it even got close to the 10-week moving average. So this is one just if you've got it, sit with it, hold on to it. If you're nervous about the market, you could take some profits here. I mean, on leaderboard, it was a full position when we started. I think probably going into the new year when we were just nervous about our exposure to the market. We cut it to a half, and then we cut it to a quarter a couple of weeks ago when it started for Apple kind of going vertical, or at least accelerating its rise, which again, this is completely out of character. It hasn't had a move like this in years. I mean, maybe a decade. So, and we're just sitting and hoping it comes in, get support at the 10-week, and depending on where the market is at that point, we would perhaps restore that other quarter position and take it back to a half. But right now, it's just waiting and holding.
Gotcha. All right.
Yeah.
My computer's having a little bit of freezing, so.
Well, I guess elsewhere in the big cap tech space, a couple of people are asking about Google since it is heading into earnings tonight. This one extended. But how would you handle this? Because I know when we normally talk about earnings gaps, it's usually out of a base that we're mostly focused in on. So if it's already extended from a proper chart pattern, how would you handle a breakaway gap?
Well, let's see if Ed can type in.
Well, I was typing in some things, just trying to get something to go. That was something I had typed in quite a while ago. This is just
why don't you just X out of MarketSmith and relaunch it? Maybe that'll.
Yeah, I don't know if that's the issue.
Or switch to because. Yeah.
Yeah.
Hey.
So. I'll relaunch here in a little bit.
Okay, and go to a week. Yeah, let's go to a weekly. If you can pull that over. Oh, you're gonna have to no. No.
I did the wrong thing.
Yeah.
I'm sorry, guys.
Why don't you just relaunch MarketSmith?
That sounds like a good idea. Sorry, everyone. Okay. Now I need to share it.
Sharing is caring.
That's right. And I do care. Okay.
Good.
There it is.
All right. So what's nice to see about Google is over the last few years, going back to like 2015, 2016, it really has just kept pace with the S&P, and we're seeing an reacceleration of earnings after slowing down a little bit. So lately it's been slightly outperforming. It had especially when it pulled into the 10-week moving average, it was like a 4 or 5 weeks tight. It looks like there, and then really rallied for 2 weeks. So it's been acting well. This is a place that if it has a great report and gaps higher and is really indicative of maybe a change going on, you could nibble here and start building a position. If you've already got some shares, you could add some to it. But it would be fairly aggressive here. But I'm eager to see what they're doing, because I've kind of just dismissed the stock for many years because it didn't outperform the S&P. And it comes down to, it's like, why take on the company risk of a single stock if all it's going to do is match the S&P? And I don't think they have. Do they even have a dividend? No.
I don't believe so.
No yield. So you're missing out on the the 1.9 or 1.8% of the S&P. It just doesn't make a lot of sense. But if this is now turning into something a little more dynamic, then I would be interested in it.
It is supposed to have faster growth. It depends on the estimate. One of the things is that be careful what estimate you're looking at, just to make sure you're looking at apples to apples. Is it core revenue? Is it total revenue? Different people exclude different things. So it can be a little confusing depending on the estimate. But there is supposed to be faster growth. All the FANG stocks are supposed to have faster growth. I thought maybe we could take a look at Amazon. I'm sure some people are asking about that. Stock didn't close well, but then again, it closed up 8% or so when the market was down, closing near the lows. So it's up today.
And it was only very late in the day, I think, where it kind of gave up the fight, because I guess it just kind of faded as the day went on. But for so long, it was still, even when the market had started selling off and it was right near the high, I was really impressed. I hadn't really looked at the close. So it's an inside day right now. It's acting normally. Nothing wrong with that.
So if you bought the earnings gap, would you be adding here, or would you wait for it to take out Friday's high?
Well, probably if you had bought the earnings on Friday, most likely you're probably either flat or slightly down from your buy, unless you were buying on the pullback late in the day, which I wouldn't be doing that. So you should never average down into a stock. So that's one thing you never want to, if you're down on a stock, because that's how people get really into trouble, where things aren't working quite right, but they really believe in it, so they put more money in to lower their average cost. Yes, but you're essentially throwing good money after bad, and until that thing starts turning positive in your account, don't add shares to it. So for most folks, I think the next add-on period would be taking out Friday's high, ideally closing above Friday's high before making any more moves on it. But it's acting nicely today, no doubt.
Gotcha.
And now the NASDAQ, it's pushing almost 1%. It's at 0.98 right now.
Yeah, nice move.
More airmail from Mike. Let's see what's going on.
Yeah.
He likes to be involved, even when
Yeah,
he's.
yeah.
Hey,
Right.
Justin. Yeah, Justin. You know, I wanted to bring up Snap. Somebody was asking about
Yeah, Snap is
before.
Mhm.
You know, before the earnings tomorrow. They have earnings after the close. You know, after Facebook's earnings, it came down a little bit, but back above the buy point, it looks like.
Yeah, and I mean, this is something that we keep on seeing happening over and over, where these stocks will have their breakout and they'll pull back, and when they get support right at the top of that base, I mean, that's really ideal action. I mean, of course, you never want your stock to go down, and you know, sometimes that's frustrating that it's like, oh, I bought it and it didn't go immediately up. I always prefer for it to immediately go up and make me feel like I'm a good person and deserving of good things. But the
It's
reality,
nice to feel that way.
it's nice to feel that way. The reality is that you know, 40% or more of these stocks will pull back to their buy points, and that's very natural and normal action that you see in these leaders a lot of times. So Snap is doing everything that's normal, but of course, you know, we wouldn't want to be buying right here, right ahead of earnings, but it does kind of keep it in that buy range, and you know, potentially actionable if earnings come out, you know, and are looking good.
You know that, well, one of the things is, like, let's set aside earnings. Okay, let's just say that there weren't earnings right now. It's in a buy zone. This is always one of the things that's like tricky with a shelf kind of situation. Is it, do you buy it when it's here, or do you wait until it gets above get the high? Because it's sort of either way, it seems a little odd, which is one reason it's always nice to see handles in the base. But
Well, and here, you know, I mean, this is where sometimes the kind of a little bit of the aggressive entry, you know, sometimes I'll just kind of be looking for a sign of strength, you know. So if it comes back down to the top of that base, and then I see some strength coming in, you know, whether it's maybe breaking a short-term downtrend, you could even use sometimes an intraday chart. You know, again, I don't suggest using intraday charts for a lot of people because, you know, it can really start making you panic a little bit when you see these big moves. They look like these huge spreads, and then you kind of step back and it's like, wait a minute, that was only 10 cents, you know. So, you know, just be careful, but it is a way that you can kind of do some of these more aggressive entries.
gotcha.
Zoom is just surging higher today.
Zooming?
Yeah, it's zooming right on up there, about 7%.
Must have gotten our subscriber numbers. That must be it.
Yeah, there you go.
By the way, I was
There you
just in
go.
Atlanta this weekend, and it was really great seeing a lot of people that, you know, have been watching us on IBD Live, and you know, coming up and, you know, saying how much they enjoy the show. So if anyone's out in Charlotte, I'll be in Charlotte next weekend for a trading summit on Saturday.
Gotcha.
So come say hello.
So the only news out today is that they've announced their release date.
Yeah, I mean, this thing really came down sharply. I mean, it's profitable. It's really strong revenue growth. I don't know if it just ran up just too far.
Mhm.
And obviously it got hit with all the software, but it did not come back. So, you know, it really, some of those software makers really came down. So you could just understand why it came down, but boy, it came down so hard and has a long way to go. I mean, it's, so there, but it's definitely making, it's nice to see it bounce back. But I would think that we'd want to wait for this to make a lot of progress toward the old high, and then set up in some way, or maybe form another base. Like, you know, it's so
Yeah.
deep, you might want it to break out and then form another base that's a little bit more likely to succeed.
Yeah, 107 to 60, so that's going to be, or 61, I guess, is that looks to me to be in that 40% range and
Yeah.
above, where it's just not, you know, sure, you could swing trade this and you know, play the rebound going back up, but bases like this just do not have a good track record of delivering gains. They're usually, what'll happen, it'll come up, maybe stall around 100, something like that, and then maybe go sideways for 5 weeks, make a new base, and that is a much better place to make an effort.
You know, I wanted to call up Baba. This is like a good indicator of the Chinese economy. Alibaba's back above its 50-day line.
Yeah.
Obviously, pretty steep downtrend. It's still below its 10-day line and everything. It's, it's been fighting along the way. Part of the problem is that the 50-day line was rising so fast that it was hard to keep up in that kind of environment. It was a sell signal last week because it closed, 2.7% below the thing. It doesn't mean that it can't go back up. It was just that the risks are that are pretty negative. What would you say, Chris, to somebody who held on? Like you might have said, okay, maybe you should have sold last week because it was, breaking through the 10-week line, but it's obviously rebounding now. But do you sell in the strength, or do you say, let it ride?
I'd let it ride. I mean, that's good action. That's what it should be doing. Unfortunately, it closed a little, more than we like to hold.
Yeah.
On a test of the 10-week moving average. If we go back to the weekly, let's just take a look at it. I mean, there's still the obviously the risk in China has not gone away, and if this persists, even though it's unlikely that the epidemic will turn into a true pandemic and start hitting countries like the U.S. in a meaningful way, but if China goes into a recession over this, that would be that would be a big issue for everyone.
Yeah.
So,
and it seems like that's what the a big risk here is what happens to the businesses that are kind of Disney shutting down operations there, and a lot of businesses shutting down their operations in China, and what effect does that have to the economy of China and to areas around the world?
With just-in-time supply chains, it's a little bit like rush hour traffic, or like where the traffic is going it's going 60, but it's pretty packed. But when you actually get stopped, how long it takes for all the cars to get going. That first car goes, next car waits a couple seconds, then it goes. I mean, so just, even if, some of these companies get back on production, and this is one reason why the chip stocks have been under pressure in the recent week, is that even if that company itself is operating, what suppliers, and it could just be one supplier of the supplier of the supplier, that causes a big headache. You're used to it, it all runs smoothly, and then maybe it doesn't. But I thought, in honor of Mike, we could take a look at a couple of stocks that are doing very well, little Mike Webster stocks. Tesla. Tesla apparently is becoming SpaceX and is going to go to Mars by itself. Positive news. It's just doing great. Obviously, as we've been saying for a while, you can't really buy it because it's just so extended. It could easily. I mean, look at the from yesterday's the 10-day line. It's like it was 13% above the 10-day line. We don't have it yet, but it's probably like 16, 17% above the 10-day line, let alone the 50-day line. You're probably looking at a 55%
and a lot of people
move.
A lot of people might look at this and say, how could you not say that this, wouldn't have been a good buy below 600 or, whatever. It's just, we're talking about an odds game here. And, when something gets that extended, the odds just start getting out of your favor. And that's why we suggest that you don't play something that's extended like that. You're just more likely to get hit with a pullback. Now, just because that doesn't happen and it goes up, if you were buying it, consider yourself lucky, not good. Okay, because it wasn't a good, even though it was a good outcome, your process was a little flawed, because that's going to work against you in a lot of cases. So just, we are always very careful with these extended stocks. And I should mention, I do have a position in this myself. So.
I mean, this stock could easily fall 25%, and it wouldn't really look bad.
Right.
I mean, obviously, if it fell 25% a day, it would look bad.
It would feel bad. It would feel bad.
But if it fell 25% over a few weeks, and I know, that's just keep that in mind. It would be normal. And, but if you just bought it, I mean, so just keep that in mind. But to extend the positive Mike Webster feeling, let's go to Netflix. Netflix is operating pretty well here. It has had a pretty wild action since its earnings, selling off, but then rebounding nicely, and it's acting pretty well here.
And, for a long time with Netflix, what we were talking about was that gap back in July when they had that subscriber miss, that was kind of making the chart look a little flawed. But if it can kind of overcome that area, the relative strength line is now certainly in a more positive trend here. That was another concern about it. It was just had such a poor relative strength line, but that's improving. So it's starting to make this look better, certainly.
Right. If you go to the weekly, I mean, the issue is still that it last made a new high in 2018.
Yeah.
It's been underperforming. Actually, I got into an argument about this stock over the weekend, camping with a guy for the first time, and he didn't really understand how I analyze stocks, and so I said Disney Plus is killing Netflix, and as a Netflix investor, that kind of touched a nerve. So, and we didn't have signal, so I couldn't show him the chart and explain to him all the issues going on.
And I don't even know if it's Disney Plus at this point, because I think for a lot of people, I mean, I consider myself a person, and we have Netflix and Disney Plus. They're so cheap that we're not going to get rid of either. I think the bigger issue with Netflix was some of those subscriber misses, that didn't really have anything to do with Disney Plus, and the fact that it's spending so much money on its original programming.
Right.
Now, granted, it's paying off at the award shows. They're doing very well at the award shows. A lot of people are saying that this is critically acclaimed stuff, but it costs so much. And
I think it's competition in general, though.
Yeah.
It's not just Disney
It's
Plus.
not just Disney
You
Plus.
have Apple now. They
Right.
have their original shows, Peacock's coming out, HBO. What is it? Max, HBO, whatever. There's so many
everyone's
different.
got something.
So it's getting crowded.
Something.
It's getting crowded.
Yeah.
I mean, they won't be able to raise subscription prices very easily.
No,
I mean, that's part of it. I think part of the bull thesis is Netflix can raise prices. Maybe they'll be able to cut back on the original content, or at least original content as a share of their subscribers or a share of their revenue. I mean, but now the pressure and the bidding up costs is so high, because now you're not just competing for talent with the networks and everything, but now, I mean, everybody is doing that. I mean, it's just, so there's that issue. Disney reports earnings tomorrow, so I think that'll be a big deal. How many subscribers do they have for Disney Plus?
Right.
Because there was one reason why Netflix is up is because people said, aha, people are cutting the cord like crazy. That's what we found out from Comcast and some others. Well, what if they're all going to Disney Plus? Now, again, you can take both, but it'll be interesting to see. So that's
just, I mean, with low cost competitors coming in, it's going to, there's pricing pressures, there's more choices.
I think that's the big issue, right?
There, what I hear from people here in the industry, they're really paying premiums for different, studio and production positions where people, my sister's in the business, and she was saying, like, a friend of hers took a position there. It's like 2 rungs down from his prior position, but he's making more money. So
I'm just calling up
I think
Disney
the costs
here.
are a big issue.
I'm just calling up Disney because it's going above its 200-day line today. So, I mean, that's not great, but it is ahead of their earnings tomorrow. So, Chris, you wanted to do something?
Let's. There's questions about Luckin and AMD. So why don't we take a look at Luckin Coffee? And it's up a little bit from where it closed on Friday, but still between the coronavirus and the shorting notes, not looking real great right now. And I didn't have this, but if I was holding this and hoping for a successful test of the 10-week moving average, if we go to that, I believe it clearly broke through it. Yeah, I mean, that's something. And really at the low of Friday, it had round trip 100% gain essentially. So that is not. This is
not the action of a leader.
No, right. And this is, for me, this is done for now. It's gotta set up again, and I would just, again, I'm sure there's going to be trades in there where if you want to capture some short-term profits, but holding it for a long-term gain, this is no longer looking like a long-term, like a big winner. They don't do this. What about Dexcom? There's a question about Dexcom.
You also mentioned AMD. So
Let's go to okay. Well, Dexcom today, earnings are coming up in 10 days, so it's moved nicely. I would have liked it better had it held the new high that it scored on Friday, but it reversed, with the rest of the market. It looks okay to me.
I'm just going to call up Pod.
Yeah, we'll do the
diabetes
diabetes
roundup.
Yeah.
Just showing it as a little quick thing. Pod is
Mhm.
acting fine.
Mhm.
Tandem down a little bit, but holding nicely. That's a nice tight action there, and on that day.
And actually, the good thing about Tandem, and I've got a small position in this, is that look where it closed on Friday, where everything else was getting killed, and it really was holding this big breakout from earlier in the week, even after that day after, where it had such a wide range and closed kind of in the looks like in the lower half. But
Yeah.
if we go to the weekly, let's just take a quick. Well,
No. That's I thought you were saying to go to AMDs, but here, yeah, on a weekly,
yeah, that
really nice gain, 10%. That was on a really bad
been
week.
it's been a while since we've seen a breakout with such a clear leading RS line. So at the the beginning of this flat base in there.
Yeah.
Or was it a flat base?
Cup with handle is
But you
You're
could
right,
say,
but how deep was the handle?
showing
yeah, it's pretty
pretty
deep. You
deep.
could have called
20%. Yeah. Okay.
you could have
So
called it its own thing, and it is
Yeah.
above the handle at least, whatever that is.
right. So it was a consolidation into itself. That's how I'm looking at it.
Really quickly before we move off of the diabetes stocks, for Dexcom, we're getting a question from Jeff asking, how far ahead of earnings would you adjust your position? We have earnings somewhat around the corner.
And probably 2 weeks from now, yeah.
Yeah,
Or next week.
If it can close above 242.14, I guess you could add some shares, and this would be like maybe a 1% add. Out of, let's say you have a 10% position, if you want to add 1%, something like that, that would be appropriate. But you don't want to get too heavy and start getting your cost basis turned around on something like this right ahead of earnings, because you want to head into it with a nice profit. Can we go to AMD now?
Yeah.
Testing the
And
10-week.
yeah, let's go to the weekly. So a lot of volume last week, but it held the 10-week. It's holding it right now. Let's call it SMH, because I think that's really I mean, there's a rotation right now. Now it closed below its 10-week moving average, and if we call up ASML, that was like one of the first.
Yeah.
I think that was the first chip stock that we bought to put on leaderboard in this latest rally, and the reason was it was one of the first that actually broke out. So we
And the
jumped
relative
on it.
strength was
Yeah.
one of the strongest. Yeah.
And it's a good example of it's not a huge gain. It's not going to change your life, but I mean,
Yeah, I want to
Justin, what was
But
our
it was nice and
final?
Hey,
steady.
I'd like to
That was
interrupt
like
the
20,
market. The market is
25%.
picking up speed because
Yeah.
the ISM manufacturing index, forgot to mention that this was coming out at 7 a.m. Pacific. It came in at 50.9, and that is above the break-even level. That's
Mhm.
up from 47.2, and the forecast was more like 48.5. So this was much better than expected, despite some issues coming in Boeing and stuff. So that's really positive, given that we have some negatives that are probably going to affect us in the coming weeks. But just wanted to bring that up. What is it now? We have
It's up
now
almost one. It's almost up 1.5%.
and the Dow is up 125 and the S&P 1.2.
There we go.
So Chris and Justin, you were talking about.
No, so it's just a good example of, if you just focus on breakouts with leading RS lines and hold them until they break their 10-week moving average, that's kind of those meaty gains that will really add up over the year. And then you might get something that like a Tesla or something that really takes off, and that's where you can have a fantastic year if you're just being focused on what you're doing and very methodical.
maybe we should just kind of take a look at the market. There's probably a lot of questions on the whole, hedging. We went to uptrend under pressure on
Right.
Friday. What does today's strength mean for that? And I should also address. I did see a number of questions on Market School, something that we've referred to a couple times.
Mm-hmm.
And Market School is it's really kind of an automated way of looking at the market and kind of doing what the big picture does on a regular basis. But we kind of have adjustments for how invested you should be. So we went to a 3 on Friday as the big picture team decided to go uptrend under pressure. And it's basically like, hey, that's just a point in which you're reducing your exposure because things could get uglier quickly. And now that we're showing the strength, I mean, we still haven't gotten above Friday's high. Is that right?
No.
Yeah. So that could be a potential level of resistance. Again, we've been saying for a while here that what we're looking for is kind of a pause between that high of the 24th and the low of the 27th, the range that Ed had pointed out earlier. And we are still in that range. So it's kind of, it's still pausing really.
Yeah, but we were at a little over 1.5%, and now we're down at 1.38, and there was a really, quick sell-off there. Now it's starting to come back again.
So does this mean hedges are off, that you're getting aggressive again? I mean, some people were asking, does this mean you scale back on your TQQQ? I personally on Friday did scale back on my TQQQ. I'm mostly dealing with a cash account, so I don't usually mess with the hedging too much because I'm not trying to keep my positions necessarily for tax purposes or anything like that. I can just I'll scale back on my TQQQ, and then if things look better, I'll just buy it back, and maybe I'm going to miss out on a point or two here or there. But that's kind of the way that I handle it. What about you with your hedges and everything like that, Chris?
Yeah, I was hedged on Friday, and I, in the first few minutes of the session, I took them off. So I'm now back unhedged, and actually, this is the issue with hedging, because the market was gapping up.
Right.
That I'm not I guess overall not taking part in this bounce today.
Right.
But to me, I thought about it and I go, I know that if my concern was that if, again, over the weekend, if the headlines really pile up and it's getting out of control, I would much rather give up some upside rather than take a huge downdraft, because I still grappling with the fact that I feel like I'm too exposed to the market right now, but none of I'm trimming the things that aren't working, but everything else is working. So I'm just trying to manage the amount of risk that I've got, with the idea that there could be some big headlines that could really torpedo the market.
And keeping that in mind, I would say that the last 2 Fridays have had, we had some negative. I think there's sort of concern. I think it'd be nice to see.
No one wants to be
long, because what happens if, oh, by the way, we didn't realize it, but there's 1,000 cases in Boston, kind of thing. This is a pandemic. I'm not right now, especially with earnings season and everything else. There's a lot of things that could go wrong in addition to the coronavirus. So there is that. I mean, I think it'd be nice to see a positive, or at least not a bad action on a Friday. Obviously, this is a nice response to Friday, but it could be that we chug along and do fine, and then we have a bad Friday again. So I would keep that in mind. Some people were asking about XP. There we go. This one had positive. They gave some preliminary numbers on Friday, and that helped it rise despite the market being so weak. And it's continuing to move higher today. It's almost like, just forget about that other week we had.
Does this feel like more preliminary numbers are coming out lately? I don't know if
well, there were a bunch for the
JP Morgan
Yeah,
conference?
The JP Morgan
Morgan.
conference. Yeah, I mean, because I know we had Cardalytics on Swing Trader, and we got this huge 20% move in a single day on that. But it just, I don't know. It feels like maybe it's just that it's happening in stocks that I'm watching a little bit more, and so anecdotally, it feels more. But
Yeah. So
Can we
obviously it's
jump
back.
to?
Yeah.
Oh, I'm sorry. Go
But
ahead.
what do you do with something like this? Okay, it's there. It's back above the buy point, but the buy point was sort of invalidated. It's an IPO. I don't know. It's just sort of like it. I mean, maybe it'll work. I don't know. I mean,
Right. I mean, I've got some shares. It's again a very modest position. I'm typically.
so were you able to hold through that?
Yeah.
Yeah.
I
Okay.
held through it
Mhm.
because of the modest
Right.
size, and there's no 50-day yet.
Yeah.
and actually, I will tell you what my line in the sand was, is if it took out the low of that base, especially if it closed below
Right-
it, and
right
it
here?
came so close.
Look at how
Very close.
And so that's where, and I talk a lot about using the 10-week moving average, even when there's no 10-week moving average. But even that, you need to have some final point where you're not going to let a stock go down 20% against you or something like that. It's you just got to buckle in and let these go. And then really the only way for me to handle them is just go smaller.
Gotcha. Chris, you wanted to go to something else?
Yeah. Let's look at DocuSign. Again, this is one that kind of wore me out, and I still have a position in it. I had bought an option, and on the day that the option expired, it was like a few cents below the expiration. So that's always an issue. But it's been acting much better, and just kind of working its way up higher. It's not a super fast moving stock right now, even though it did, zoom out of the bottom of that base. Can we look at the weekly? The other nice thing, it's making new highs, and so is the RS line. So that's good. It's still, well over a month until earnings come out again. So that big outside day last week, was obviously positive. You could have added shares right there. Even now, it's not really up that much. You could add some shares. I'm not sure. I mean, Justin, what would you do here?
Well, yeah, I actually was purchasing a little bit, and this is one that's kind of given me trouble before. I've made some money on it, but a lot of times I've lost like just a little bit because it seems like it's starting to move, and then it like breaks the expectation. It kind of just doesn't go anywhere. So yeah, I did pick up some shares earlier a couple weeks ago, and oh wait a minute, how long have I held this? Yeah, it was just a couple weeks ago. My scale was off on my chart, so I thought it was further back than I was originally.
Right.
Yeah, so I just bought it a couple weeks ago as it was starting to move up again off the 50-day 10-week moving average line. And I don't have a large position in it, and
yeah.
Only because of the trouble I've had with it in the past. But so far, it's acting right, and I'm just kind of taking my small gains and letting it move a little bit higher, and but watching it closely only because, again, the trouble I've had with it in the past.
Yeah.
All right, I thought I'd pull up, and because a lot of software is doing well. This is one of the stocks that we wrote about over the weekend. Bill Peters wrote a nice article about just 5 software stocks that are sort of near buy points, and this was one of them near sort of a tightish area right here. That had a few of them trying once again to rebound from its 10-week line. And
I mean, we were seeing such strength in software, kind of, even with the pullback here, a lot of the software names have been holding up very well. This is one of them. It's holding above its 50-day moving average. One of the things that was very notable, and this is from our good friend Praveen. He keeps track of the percentage of stocks that are above the 50-day, above the 200-day, and it was starting to get to excessive levels, and it dropped pretty precipitously. But the stocks that I think got our interest the most were those that were holding above their 10-week moving average lines, and showing that relative strength. And Splunk and a lot of the software names definitely fall into that category.
When it comes to the 3 weeks tight, if you don't mind flipping back to the weekly chart here, because I know we like for it to be somewhat unique, but I feel like there's quite a few charts now. This one, Adobe, where there's a couple tight tight areas on top of each other. So
Tight on tight.
Tight on tight, does that then just become a judgment call at that point?
Well, Adobe is a slower mover, and so you're going to expect to see
More of those.
action like that.
And if you go back, you can see there's a lot of those.
Yeah, they're all over the chart.
Yeah.
But if we jump back to Splunk, then remember it had a really powerful move out of that base. How much was it up that week where it really moved?
Didn't even break out that week technically.
Yeah, so it was up 17%, and then the following week it added another probably 6%. So that's really nice to see that after being up almost 25% in 2 weeks, that this stock refused to really give back anything and has traded tightly. The RS line too is at least in relative to lately it's still trying to push higher. It hasn't really been outperforming too much lately. I think that if I see it take out 161.49, that's the latest 3 weeks tight buy point in some volume, I would probably add some shares at that point. And especially if you if you didn't buy it earlier, it's the first pullback to the 10-week moving average. You could open a position, although I wouldn't go 100% position size at whatever your position size is. I'd maybe go 50 to start with, and then build it up as it progresses.
Since we're on S's, Square is
oh yeah,
there we go,
up a little bit. And when I say a little bit, I mean quite a bit. So what that's seems like it's also got some volume behind it, but it looks like it's up 4.5%. Now we had mentioned this earlier on the show as it was breaking out around just a little bit above 70. What was that, last week or the week before? So it's extended here. So I don't think really actionable, but it's showing good signs of life. The relative strength definitely started screaming out to recent highs, but it does have that big gap down that it has to kind of recover from, but it looks like it's filling in that gap from July now. So,
and I mean this weekly chart
let's look at the weekly.
So like 2017 and 2018, such a different stock.
Oh yeah.
But the good thing is now it's been going sideways like a year and a half now about, and again, I probably wouldn't be buying it here. I mean, I am not buying it here. I did not buy that breakout. And when it comes up to around 80, if it probably wouldn't mess with that because of the lagging RS line. But if it makes another base, maybe a flat base, and holds up well, that's something where it would be on my radar. Although you look at the 2020 estimates, it's 22%. So it's I'm not sure what the once they report the Q4 earnings and we get a 2021 number and see how that looks.
I'm going to call up, stay in the payment space. PayPal is not there, but you can see the handle. It's sort of moving up on this situation. So it had earnings, sort of mixed guidance, and bouncing around. But the RS line is, it's got issues, like a lot of these software. But it didn't plunge like Square and having a year-long situation, but it hasn't bounced back all the way.
And I'm looking at Square's, if we can just wrap that one up. So the earnings expectations are for 50% in the Q4, 45% in Q1, and then dropping to 10 and 12%. So there really is an earnings slowdown. So we'd have to do some deep dive and understand what's going on fundamentally at the company.
Gotcha. Justin, is there anything you'd like to take a look at?
Well, another one that we were, again, kind of going with the S's, although the symbol is different, salesforce.com. The symbol is CRM on that one. This is another one that's, I feel like these ones are kind of jumping out at me that are holding up well, that are acting tight while the market is kind of doing its little gyrations here. These are the ones that are really kind of capturing my interest right now. So CRM, is looking, pretty tame here. And again, it's in that software, another S, just
Yep.
keeping with the theme. So this is one to keep an eye on, I think.
Let's keep the S's going. So Keith is asking about Stoneco, STEN. STNE, whatever, close enough. And again, this, you look at the chart and you go, yeah, that's okay. It's up, 3%, which is kind of a modest move for it, but it's been acting well. And what was interesting is earlier in the week when we had our, I think on Monday when the first China related sell-off started or was continuing, it was down quite a bit. But then on Friday, it was, very tame. And today, moving back towards a new high. If we go to the weekly, essentially this is like the second or third test of the 10-week moving average since it first tried to break out. I've decided I'm gonna just keep this like a half position. I'm not gonna add to it because it's so wild. And maybe if it breaks, sets up a base and has a true breakout, maybe add something there. But it continues to be a wild one. At least it's acting right for how it unto itself.
Speaking of wild ones, Solar Edge is up like 3.5%, something like that. That's SEDG. This one we were kind of talking about looking very broken after it had that nice gain and gave all of it back in a single day. Again, that's not normal action, but now it seems like it's kind of just pause. And if you go to the weekly chart, it doesn't look as bad, but that was still a big move that it kind of reversed all of those gains. So it's not one that I'm really looking to play, at this point, even though it got support at the 10-week line. This one just might be a little bit too wild for me. I don't think I would handle it right. And that break does bother me still.
Yeah. I mean, we've talked about this, especially when stocks retrace a 10% or greater gain out of a buy point. It's never a good sign. So far, it seems like it's working okay. I'd rather wait for a cleaner setup to appear.
And it got support, at areas that you would like to see it get support at. It got support right at the buy point, and again at the 10-week line. But it just, that was a big move down.
I see. We're going to move to a neighbor letter. How about RH?
Okay. I wasn't sure if you were going to go up to RH or down to like TPX or.
So Nancy's asking about what's up with RH, and we trimmed some of this on Friday, I think, didn't we?
No, I think we took it off. Yeah, we trimmed it. Yeah.
We trimmed it earlier, took it to a quarter, and wanted to see how, if it could get some support. And it had broken that downtrend line that Ed just redrew there, and that didn't work. So you could draw another one.
And it also closed more than 2% below its 10-week line.
Yeah. So let's go and look at it on the weekly. So
does that matter as much when it's in a base, though? I mean, okay. Oh, okay. I wasn't sure what the rules were on that. So
that's and the whole thing is there are going to be many cases where they'll close and they'll just continue basing and they'll break out again. And and sure there will be places where like, oh, I could have held it, but just going back and doing the post analysis of I don't know how many trades we've made in the last 3 years. Let's say, it's probably more than 100, 200 trades, something like that. There's probably almost 100 trades per year. It just clearly made a difference, because what happens is you get a stock like what we've got right now in Tesla, which is up like 75-80% more from the buy point now, and this
Yeah,
is
it's well over that.
right, and
Yeah.
it has all the hallmarks of a big leader. And part of the reason is, if we go to Tesla for a second and just look at that weekly, one, two, three, four, five, six, seven, 8, 9, 10, 11. It's now working on its 11th week up in a row. And I can't tell you how many times, sitting with Bill, either in his office or watching him at a seminar, and he would just count those and just say, that you can't ignore that. I mean, that is really unusual strength. And it's those type that you want to sit with and let them pull back, because if they do, then I'm not going to say it's going to go up another 100% or whatever it is right now, but this is what the big winners look like early on in their run. So hopefully we can just all walk right through, hand in hand on this model book stock in the making.
Yeah, and 5 weeks up was kind of the magic number. Once he saw either 5 weeks up in the base, again, he just looked at that and said, okay, this is showing a lot of strength, a lot of buying, especially when there was some volume behind it. His belief was, okay, that's the institutions. They can't buy their position in one day. They're going to be spreading it out over weeks, and he always believed that's your institutions just trying to get a bigger and bigger position in a stock. So it could happen in the base, or shortly after it comes out of the base, when you see that first 5 weeks, all of them up. Then he looks at that and says, look, that's so much power. This is one that could really move. And that's, a lot of people ask, about the 20% profit taking rule that we have, and they say, well, how do you know when to take that 20% and when to let it run a little bit? This is one of those signs, when you see either the 20% in 3 weeks or less, or you see those 5 weeks up in a row. Those are a couple things that kind of let you know you might have something special.
Yeah, and John Choi is asking, Tesla is kind of parabolic, meaning it's been moving higher, and now the ascent is even greater. That's true. I wouldn't say that this is an exhaustion gap right now, because if we go to the daily, maybe it's too early in its run.
Yes,
and actually, I know Mike has been looking at Taser with this one, and Taser faked me out, because it had like a couple of climactic weeks and days early on, and over months. But it was too early in the run. You usually don't expect to see a climax run out of a first stage base.
And Bill's rule was 18 weeks.
Right. 18
he wasn't even looking for it. And Schwab was an example of that. If I remember correctly, Schwab had in its 98 move, October 98, this wonderful 6-month move, over 400%. And there was a point in time where it looked very climactic. It had a lot of the signs, but it was only in its 11th week. And so Bill said, hey, that's too early. That's too early to be a climax.
So this actually, how much is it above the 20-day right now? I mean, the 10-day?
Over the 10-day, it's up 20%.
19, okay, up 20%, and at the high, it was over 20%.
Yeah.
So let me just take a look at what a put on Tesla's going for right now, because this is a place where you would expect it's going vertical. It could pull back. The 10-week is probably about 300 points below where it is right now. This is the type, if I were holding this, and I'm still kicking myself that I'm not, but I would be looking at a put. to maybe, I mean, you could sell some shares, take some money off the table. I'm more like, I don't want to give up any, and I want to make some money if it does pull back. So let's say you want to go out. So let's say the April puts, and if you look, gosh, there's so many. Having to scroll down. So right now, the at the money put is the 720, and it's got a 45 delta. So if you want to, really tie it into a 50 delta, like I like to do, that would be 740. And the bid ask right now is 85 by 87. It's a little wide, but for something like this, it's not terrible. And really, that's the cost of your put, assuming you can get within the spread. But if I had this and seeing the action today, especially that the market might come under some pressure, I would probably do maybe a half hedge on it, and again, buy a similar number of puts, but because it's a 50 delta, that would be a half hedge. But that could be something you could do.
Now, one thing we should, mention is that might be a little bit tougher because this is a high price stock,
Oh, that's
and
true.
so it.
Well, you're not going to exercise it,
right? You're not going to exercise it, so that's one thing. But it might be a little bit hard to get exactly that half, because it's like, oh well, who's trading in the round lots in this case? You might be doing the, 50 shares or 152,
yeah,
so it might not work out, the math might not work out exact, but you kind of, are you wanting to hedge a little bit more, a little bit less, or again, there's always the option of taking off some shares.
Yeah,
if you
I
want.
just wanted to call up a couple of stocks that are going to report tomorrow. One of them is TransDigm, a leaderboard stock, long-term leader. I mean, it's been acting well, but just that's something we should be paying attention to. We'll definitely be looking at tomorrow.
Yeah.
Chipotle will be after the close. Yeah.
If we could go back to TDG and just look at the weekly, this one is out of character too, because it's gotten extended from its 10-week moving average. Not quite the same type move that Tesla has been doing, but given how it typically moves, it's broken above an upper channel line. You could probably draw one over the last couple of years, maybe starting in the December 17 base there.
But
here? Yeah.
Okay.
From the high, but from the highs, not the lows.
Okay.
Yeah, you can touch a lot of spots there, and so it's definitely out of character. So that's one thing that concerns me. But for us, we're trying to hold this as the long-term leader because this is the poster child of the current, secular uptrend. It's, the last we checked, it had outperformed both Apple and Amazon, and most people have never heard of this stock.
Yeah, so that's probably the most important one before the open. I guess another one before the open is Lumentum, actually. And, this one is trying to get support. It had gotten past the profit-taking zone, now consolidating around the 50-day line. This is a supplier to the Apple iPhone.
And let's see, I think Fiserv is reporting tomorrow as well.
I think it's tomorrow night, though. Fiserv is tomorrow night. That's another long-term leader. There's Chipotle after the close. There is a lot of stuff tomorrow after the close. But just the ones before the open are the big that I noticed were TransDigm and Lumentum. So, I mean, I think we probably should wrap up. I'll, get maybe review a little bit. But NASDAQ is up 1.6%, high of the day. Adobe, 3 weeks tight. Salesforce 3 weeks tight. They're not in buy zone, but they're acting very well over the last few weeks. Dynatrace, not having a great day. I mean, some of the top software stocks are coming down a little bit, but most of them are acting well. This one does not look particularly strong. Apple, now it's turned positive. Not a real surprise given how the market was, but really nice to see because that is the market leader. Google, earnings tonight. Nice action so far. Amazon, newest regaining that $1 trillion area, acting well today. Snap, earnings tomorrow, in a buy zone, but Zoom, Excuse me, Chris, could you take it for a little bit?
Okay.
All right. Actually, let's see here. Oh, I'm sorry. I can take on. We already went through Tesla. We don't need to look at that again, but Baba, really nice move back. Netflix, you know, relative strength picking up. Disney back of the 200-day line. They have earnings tomorrow. Luckin Coffee can't be stopped. I mean, it's not back at the 50-day line, but man, that is a wild one. Dexcom down a little bit, but not much. You know, it's already off the lows. Same with Tandem. AMD, that's positive. That's nice. DocuSign, ASML, trying to get back above its 50-day. XP,
getting stronger.
Wow.
getting stronger. PayPal, getting closer to a handle buy point. Square keeps on running. So yeah, there's a lot of good stuff out there today. You know, really nice rebound. You know, it's really what you want to see from today's action. We answered a lot of questions today. I'm sure there's probably a lot more that we have to do. You know, David and Mike were really working furiously. You can keep the conversation going. Contact us through Twitter. All our Twitter handles are on the IBD Live page. We'll include to a file with all the answered questions and responses as part of the recap email, along with a pair of really important stock lists. And that recap should be out in the next hour or two. And you know, it's really going to be interesting. It's going to be a big earnings week. Coronavirus is still out there. Really, just it should be a fascinating week. Good luck to you on trading today. And in any case, I hope you have a great day, and we will see you tomorrow.